Good morning, dear viewers. My name is Clive Thompson, and today is Wednesday, the 27th of August, 2025. My apologies to those of you who saw an earlier version of this video which had no sound. I've now hopefully got the sound working. Let's look at the news which has been going on overnight. What's our hatchet man been doing today? Has he fired anybody? No. Maybe there's nobody left to fire. Oh, no, I speak too soon. I'm just reading this headline here. It says, Trump has put FEMA workers on administrative leave. They've been suspended. FEMA is the Federal Emergency Management Agency. It's a US government agency which deals with government emergencies like hurricanes, earthquakes, disasters, floods, those sort of things. And when at the time of the disaster, they go and help people and all kinds of things like that. Why has he placed people on? Why has he suspended these staff? Well, it seems that something like 180 of them wrote a letter demanding protection from political firings and criticizing some recent changes by the Trump administration to the way they work. So let's see. It says 180 of them signed the letter, but only 36 of them actually put their names down. So I don't know how many of them have actually been suspended. And basically it says here that the workers who've been placed on leave or suspended will conduct no business, visit no FEMA or DHS facility, and contact no FEMA or DHS personnel. And those employees who've been suspended have been ordered to share their personal email addresses because their access to their FEMA and DHS accounts has been suspended. Interesting. So, they could have taken a leaf out of the book of what happened a month ago with the Environmental Protection Agency. They also had a certain number of employees write a letter criticizing the Trump administration in some areas, and he then suspended 140 of those employees. So one thing you have to know in business, if you want to get on in your career, criticizing your boss is generally not the way to do it. I don't know if Mr. Trump is the boss of these people or not, but it seems he can get quite upset when you don't see things his way. So on the stock market last night, the S&P continued to gain. We've got this wall of money coming into the market. It was up 0.41%. Dow was up 135 points, or 0.44%. Bond yields, at the short end, the yields went down slightly, but at the long end, they're still pretty firm. In the USA, we're trading with the 30-year yield at 4.92, just below the 5%, which is close to the maximum of the last for a long, long time. In the Europe, UK, and Japan, the long-term yields are, as near as makes no difference, at the highest seen in decades. So Europe is at 3.326 on the 30-year, Great Britain at 5.601, and Japan at 3.21% yields. All those yields are the highest in nearly 20 or 30 years. The crisis regarding the Federal Reserve deepened. Lisa Cook, who was fired on Tuesday, has refused to leave the Federal Reserve. She says that Trump has got no right to fire her, and they're going to defend her rights in the courts. So clearly, whoever's going to make money out of this, it'll be the lawyers. Obviously, the increasing control of the Fed by President Trump and his cohorts is calling into question the Federal Reserve's independence. And that, of course, is pushing up the probability of a rate cut in September. So the expectations for a rate cut in mid-September have risen from 85% yesterday to about 90.2% today. And the stock markets are pricing in, not only stock markets, but everything is pricing in quite aggressive easing. That means that although we're expecting a rate cut in September, it seems quite likely that Trump allies will be in place in the Fed enough to cause several rate cuts. And Mr. Trump actually wants to have multiple cuts and much, much deeper cuts, which, if they get them, will allow the Treasury to borrow money at the short end on the Treasury bill market at quite low rates. That would be a good thing because there's a lot of debt maturing at much higher, the debt was taken out when the rates were very low, but at today's rates, that debt would have to be rolled over at much higher interest rates. So if they can get interest rates down, it will suit the Treasury, which is the government effectively. But of course, it doesn't make sense to borrow all your money at the short end. You should diversify it out across the whole spectrum of government notes, bonds, and bills. But anyway, maybe that's just a temporary fix, which will come to haunt the next administration when a lot of that matures. So going on today, we've got today, after the market closes, or at least it says this evening, I presume that means after the market closes, we've got Nvidia's results due. Now, Nvidia's results is basically dominating Wall Street. People seem to care more about Nvidia than they do about the Federal Reserve's independence. So everybody is expecting absolutely smashing results from Nvidia, and almost certainly they will have outstanding results. Huge rise in sales, huge rise in profits. That's what the market's expecting. And if they deliver on what's expected, strictly speaking, the shares ought to go shooting upwards. But there's no guarantees in life. We don't know that's going to happen. And of course, there could be a hiccup in those results. Maybe the fact that they've agreed to pay the US government 15% of all their sales to China, revenue sharing, if you like. Maybe they'll have some comments about the future earnings or future sales based on that. But the whole world will be watching Nvidia's results because it will tell us whether or not the AI sectors continue to expand at the rate everybody thinks it's expanding. If there's a hiccup, yes, the shares could come off quite sharply, and that will bring down the entire tech sector. But having said that, there's a wall of money trying to get into Wall Street. There's a huge number of people who've missed buying Nvidia at the lower prices. And I can see that that wall of money will come back and support the price quite quickly and bring it back to all-time highs. Now, that's not a prediction. It's just a possibility. So don't take that as financial advice. It's just my personal opinion. I'm not a shareholder in Nvidia, and I don't intend to buy it. I think it's a very overpriced stock, but overpriced does not mean that it won't go up. I mean, if we put it another way, the high multiples we're seeing on these technology stocks, yes, they're high, but they're nowhere near as high as tech stocks and dot-com stocks reached at the end of 1999 and early 2000. There we were seeing price-earnings ratios mostly in the hundreds, and for the most part, these price-earnings ratios are in sort of the range of 35 to 55. So we're not that high compared with the bubble, the speculative mania of 2000.
They're pretty, aren't they?
What's that?
But they're also gibberish.
Who's that?
Well, by the end of this video, I promise you that they won't be. You're going to understand exactly
Who started
what
a video
this
on me?
means and why. And you can understand what a load of other hieroglyphs mean too. Let's get started.
Let's get stopped. I don't know how that started. I'll have to cut that out now. 1, 5, 4, 3, 2, 1. So just to conclude, let's keep an eye on Nvidia's earnings this evening. Apple's got its legal challenges with Musk AI, XAI suing them over ChatGPT dominance. We've got Alibaba has announced an AI video model, which they say has added film-grade avatar capabilities. So Chinese tech firms are all advancing on that news. And of course, Chinese competition with the USA in the AI area is intensifying. Now, there was a bit of good news from Mr. Trump yesterday. He complimented a company pen during a meeting with the South Korean president, and apparently that caused the shares of a pen manufacturer, the one who makes the pen, rise rapidly. The company called Mon Ami, their shares are up 60% in 2 days. Just goes to show a presidential endorsement can move the market. Bitcoin, which was down to 109,000 a couple of days ago, is now 111,720, and Ethereum is 4,610, both up. China's facing new tariff threats from President Trump related to data, and the trade tensions are escalating. But having said that, Chinese stocks ended up mixed last night, not very much change. In Canada, the TSX Composite Index gained 0.6. Across the board, resource-heavy stocks, or resource stocks like oil and energy and mining, all rose relative to the rest of the market, which was pretty mixed. One more bit of news on Chinese companies. There's a company called PDD, which is quoted in the United States. It sells very cheap Chinese goods, mostly to American citizens. So they ought to be affected by the tariffs and so forth. Their sales dropped very slightly for the year to June, and the share price was off just a little bit. That's all the news I've got for today. Wednesday, the 27th of August. My name is Clive Thompson. If you like what you've just heard, please subscribe and give me a like, and I'll try and answer the comments within the next few hours anyway. Thanks very much, everybody. Bye-bye now.